Welcome to this conversation on Business Redefined. Now, Kenya Power released shockingly impressive half-year numbers, and we are pleased to have the Acting General Manager in charge of Finance, Steve. Welcome on set.
Thank you. Thank you very much.
Glad to have you. When I look at the numbers, very impressive top line, even more impressive bottom line. But when I look at your trading margin, by that, for the sake of our viewers, I mean the growth between your revenue and your cost of sales, it looks like you're really operating on some very tight margins. Does that stick out to you as a point of concern?
You're right, Julian. If you look at the margin, really the growth in the sales was 21% and growth in the cost of sales 21 as well. But then the sales number and the cost of sales number include the pass-throughs. But if you look at the basic electricity revenue and basic power purchase costs, then there's a difference in the growth. Basic power purchase grew by 6%, and on the revenue side, it grew by 12%. So that's where the margin really is. The pass-throughs are in and out. Yeah.
Fantastic. And still going to the numbers, one of the concerns that I have when I look at them is that Kenya Power is still operating in negative working capital. And just for the sake of context here is that if I were an investor looking in, then I'm concerned about your capacity to meet your short-term payment obligations.
Yes, actually, negative working capital is one of the indicators of insolvency. But then for the investors that have been with us, like the lenders and all, and those who look at the numbers from a few years back coming to now, the situation was quite worse. 2-3 years ago, we had a huge negative working capital. But then the last year and in this half year, we've made quite some significant improvement on that. In the 6 months period, if you look at the improvement, is about 9 billion. If you look at from December 2020 to December 2021, the working capital has improved by 10.8 billion shillings. So really, the KPLC was actually in a deep situation in terms of the negative working capital, but that is improving over time, and we expect within a few years or so, we should actually have really moved out of the negative working capital.
I see. There was a bit of what looked like a flat line, if I could call it, on the finance cost, your payments to creditors. And I'm just curious to understand, Kenya Power is still enjoying the moratorium on debt servicing. To what extent has this given you a breather? When does this lapse? And what's the plan beyond that?
Yeah, there is a debt moratorium that is on the on-lent debt. This is debt that is guaranteed by the government of Kenya for specific projects for KPLC within the energy sector. Now, KPLC got a moratorium on this in June 2020. That was extended. So the moratorium is actually ending June 2022. Now, the moratorium has been quite helpful for KPLC because one of the issues leading to the KPLC's negative working capital is the amount of the annual debt service. That is the amount that KPLC pays every year to its lenders. So when a big chunk of this in terms of what is repayable to government for the on-lend loans is on a moratorium, then we can actually utilize that space, and that's what we've done, to actually pay down on the commercial debt and also pay down on the overdraft. And indeed, in the last 6 months period, we have been able to exit the overdraft. So what we're looking at is, because we are still within the reforms and we are not out of the negative working capital as yet, we're looking at applying to government, and we've already sent in an application to government to consider extending that moratorium so that we are able to really take advantage of that, leverage on that moratorium to be able to fast track the reforms within the sector and also fast track the movement out of the negative working capital.
Let me stay with that point for a while. So what horizon of extension are you seeking, and what sort of savings by way of a quantum number are you looking at?
Okay, our application would generally be for a 2-year period, and that has been our application for this, even in the previous one. But when the government at National Treasury actually looks at that and reviews what we are doing, what we have achieved within the period they granted us that moratorium, they would consider if they grant the 2-year or a 12-month moratorium. So that will be a decision that is made at that point.
I see.
Yeah.
When I look at Kenya Power, I've always argued that any company that has an operating profit consistently in the tens of billions is a solid company. And I look at the numbers many times and I feel like maybe Kenya Power is over-leveraged. The debt perhaps is just outsized. Is this a view you share?
Not really, not really. If you look at the debt to equity ratio, KPLC is still within that. But then really what happens is that in the utility sector, and especially electricity, and given that your controlled in terms of price, both front and back, in terms of where you purchase. The price is sort of fixed. When you're selling, the price is also sort of fixed. And then KPLC has been expanding quite exponentially in terms of the customer connections, in terms of the grid expansion. And these are investments that do not recoup in a short period of time. It takes quite a long period to recoup. So that mismatch in terms of the loan tenors and the very long period life cycle of projects to be able to recoup the amounts is what would actually give the indication of being over-leveraged as such. But really, we are within the debt to equity ratio.
Oh, fantastic. The numbers, the impressive numbers that Kenya Power just released are in the regime that was pre-tariff reduction. By the time you're releasing the full year, I think we should have had the first and second tranche. We should take the tariff, the retail tariff, down by about 30% by government statements. Do you think you'll be able to replicate this performance going forward?
Yes, actually you're right. The numbers we've reported at half year are numbers before the tariff reduction. The tariff reduction took effect in January. And you've seen the good performance, and this is because of the initiatives that were put in place, very well knowing that there would be a tariff reduction. And we really expect to continue with that, those initiatives to be able to really cover the deficit that is created by this tariff reduction. What I must mention as well is that the first phase of the reduction, the 15%, is really being, and it is expected to be really met by efficiencies within the sector. And the government has taken a whole sector approach, efficiencies within the supply chain of electricity, right from generation, transmission, distribution, and even retail. So we expect to get benefits at each and every point through the efficiencies, and that will culminate into the lower end user price. Now, the second phase of the tariff reduction, the other 15%, is predominantly expected to be funded by the renegotiation of the power purchase cost. You note, as when we started, you mentioned about the very thin margins around the cost of sales and the revenue. So before the cost of sale tweaks, then tweaking on the side of the price to the customer becomes quite a bit of a challenge, especially now that already the 15% has been effected.
Mm-hmm. And going back to the supplementary budget estimates, I think there was a provision for a cushion for Kenya Power, just speaking to the deficit that you have alluded to here. One is that what's the immediate plan in terms of how that is deployed? And secondly, could you just give us some flavor into the scale of this deficit thanks to the tariff reduction?
Yeah, if I could start with the issue around your question around the scale of the deficit. Looking at the KPLC financials full year for 2021, the top line number was about 144 billion. That is a number that is net of tax. If you gross up by, say, 16% for VAT, you'd be around 160 something, 165 or so billion shillings. If you take 15% of that, because that is what is the end user price, then you'd be talking about 24 or 25 billion shillings in terms of the full annual impact of a 15% reduction. So that would be the sort of scale that would be to that. Yeah, I have mentioned to you that there are sector efficiencies that would actually be looking at bridging that gap. Now, the other thing is that we expect with electricity becoming affordable, we will see demand growing much faster. Over the last 5 or 6 years, the average annual demand growth rate has been about between 2.5 to 3%. But you note in the half-year period, we've seen a demand growing by 8.7%, which is quite significant. So we expect that growth also to really supplement part of the reduction that we are seeing in terms of the tariff reduction. On the issue around the 9.1 billion shillings in the supplementary budget, I think that was to be discussed in Parliament. That, to my understanding, has some element of the government reimbursement to KPLC for the operations and maintenance costs for the rural electrification schemes. KPLC does some work for government in that aspect. The issue around cushioning, KPLC is listed on the stock exchange. It has some private shareholding, and some of the the decisions and some of the pronouncements of government and all that have quite some impact, and that's why, as a responsible government, there would be some provisions around cushioning. In terms of the application of those funds, I think it's first the approvals and the discussions that would be there at the board level, at KPLC, at management level, to be able to really make decisions around that.
We're having this conversation within the context of ongoing energy sector reforms, and many of us, when we saw the impressive performance by Kenya Power, the first question was, to what extent are you now deploying some of this good performance to address the arrears with a player such as KenGen? Because many investors will tell you, we see a contagion between KenGen and Kenya Power. So if you could just give us some sense around the settlement of arrears to KenGen.
Yes, KPLC has quite some significant outstanding obligations owed to KenGen, and this has been on for quite a while. And really, even with a good performance, we have really done quite some payments to KenGen to forestall the further accumulation of this amount, because over the last about 3 or 4 years, that has been accumulating. But as where we are now, we have done some reduction on that. The amount is also affected by some factor of the foreign currency fluctuations. We have some of that is in USD, and when the exchange rate moves, even though you're making payments, as well the outstanding balance is revalued based on the ruling rate at that particular point in time. So we are making progress in terms of those payments. We engage with KenGen on a continuous basis in terms of seeing how best we can be able to make the sector sustainable by being able to pay them. They have obligations as well, so we engage on a continuous basis, and we are reducing that amount. Our intention is to continue really paying down that debt, so that really we are able to clear it within time. There is the aspect of the reduction and how it affects that. As I told you, we expect the reduction to take the shape of the sector, so that we also have some reductions in terms of the bill that we get across the suppliers of energy. And we would see that also really leading to a lower monthly billing to KPLC, even as we charge the customers the lower price.
I see. Still within the context of the ongoing energy sector reforms, one of the developments which took place in January, I think that was the 14th, through the gazettement by EPRA, was the gazettement of KETRACO as a systems operator. And of course, there are some assets which should be carved out from Kenya Power going to KETRACO. So the question here is, do we have a sense of the value of those assets? And why that's important is because if I'm an investor doing a book versus market valuation of this company, I want to get a sense of how will this be affected.
Yes, there was that recommendation that came from the task force on the power purchase agreements review. And the recommendation is aimed at streamlining the sector and ensuring that we do not have duplications within the sector. And transmission, a transmission company does transmission and does it efficiently. If there are investments that government needs to make in that space, then there is a specific vehicle to do that. In terms of the valuation of assets, we have the values of the asset, the book values of the assets in our financials, and we carry them on that basis. But then when it comes to a transfer of asset, then a revaluation of assets would actually ordinarily be done, and then discussions around that would happen. But then in the case of a listed entity like KPLC, then there are provisions around there is the shareholders, the private shareholders, they would need to give an approval. There are lenders who have financing agreements that have implications on these kind of transfers and all that. They would have to really be involved in the process. So as we go towards implementing that recommendation, then we need to bring all these stakeholders together and be able to get the necessary approvals or no objections, as the case may be, to be able to do an efficient transfer of asset, but of course through valuation processes and all, to be able to ensure that as well the shareholder value is not really affected in that particular process.
Okay.
Yeah.
And one of the provisions, and I sat down with the Energy CS, Dr. Monica Juma, not too far back, and we're discussing the Energy Act of 2019 and the provision for open access, which ideally should create the window whereby generators, whether it's KenGen or IPPs, can bypass Kenya Power and go directly to consumers. In your scenario analysis, how do you see this impacting Kenya Power's financial position? Granted, it's still very in the formative stages.
Yes, actually the open access is quite a big change and a big move actually, even for KPLC, and presents quite a major risk in terms of an entire shift. A generator distributing or actually supplying very closely to a large power consumer would actually be very efficient, and they would connect at high voltage, and there would be no losses in all that. There would be the price would actually be very good because it doesn't have the transmission and maybe distribution aspect of the cost as such. So that would really have an impact on KPLC. But then, having said that, there is also noting the kind of obligations in terms of already existing agreements, power purchase agreements and things like that with the generators that are there. And there are also regulations that have been put in place through the Ministry of Energy and the regulator and the sector that actually would govern the kind of operations even with open access, so that it ensures that while we really have competition in the sector and all that, there is also sustainability and taking care of already existing contracts and obligations. So we are alive to that fact, and at KPLC we are continuously enhancing our efficiencies and the way we do business to be able to fit in within the dynamic legislation, and as well be able to offer reliable and affordable power to our customers.
Okay. Just going back to your numbers, one of the things which stood out to me, I didn't anticipate the provisions for trade and receivables. Considering the write back we saw in 2020, I didn't expect it to come so heavily again in the half-year numbers. Could you give us some detail into that?
Yeah, following the write back, then moving on to a significant number in terms of provisions. First, maybe if I could speak on the write back. The write back was as a result of quite some initiatives that we took on the debt, including enhanced revenue collection measures that were implemented, and as well we looked at the security deposits. There were accounts that did not have sufficient security deposits as per what is provided for in the Energy Act. So we looked at that, and you know, in the provisioning, when you're impairing your receivables, as per the provisions of International Financial Reporting Standard number 9, you get some cushion if you have security deposit against your receivables or guarantees in that case. So we did those processes, and we were able to get quite some significant gains around reducing the receivables. Now, moving into the period that we just reported, the increase in those receivables, one is because of the increased billing, because as you saw, the revenue has grown, and that when demand grows and the billing grows as well, when you apply the standard to these, then you'll have receivables. One thing that happens with the International Financial Reporting Standard, it changed the view of impairment of receivables from looking at what has already gone bad or what is really already going bad or becoming difficult to collect, to a futuristic view where even a current billing for today is now considered, you consider an element of impairment on a very current billing. So when you look at that aspect, then the growth in the receivables would inform the bigger number. But we are putting in place, we are continuing with our enhanced revenue collection, targeted revenue collection on the specific accounts that have been a bit difficult. In the same report you saw, we have done a bit of collections of the long outstanding debt, and that came through a lot of support from the Ministry of Energy and government in terms of those debts that are related to government. But then also, one thing I need to mention is that as we improve our billing processes and reduce billing complaints, that reduces dispute on the outstanding debt, and we are able to collect within good time. So we expect to see improvements going forward.
Just pushing that a little further, speak to the issue of commercial losses and what you guys are doing about it.
Yeah, commercial losses have been a big issue for KPLC, really, and the loss levels, if you look at the entire efficiency, we are upwards of 20% in terms of efficiency. But then, as reported today, that has improved over the last 12 months period. If you compare December 2020 and December 2021, we've had an improvement of 2.33%, and that is an improvement that quite a bit has gone into that. From I think 2017, we've seen on an annual basis the loss position increasing Yeah, we were at an 18%, went up, and we had reached 23% in terms of the system losses. But then there are those losses that are technical. There are losses that are inherent in the equipment, in the transformers, in the lines, the heating of the lines and all that. But then again, there are those losses that are because of the commercial losses, mainly the theft of electricity, the unmetered customers and all that. The activities we've been doing out there are really geared towards reducing the commercial losses, because those are quick wins. They do not require significant investment in terms of capital investments into the grid, but then just really the hygiene in terms of ensuring that all customers are metered, all meters are actually read. Any illegal connections that are out there are actually really mapped out and either inspected and ratified, and the customer is put on the or if they are not in good shape, they are recovered and the customers are actually made to apply for power and connected. So those are the things we are doing to be able to reduce the commercial losses, and we've seen quite some significant gains over that period.
Smart metering, any update?
Yes, on the smart metering, we have done smart metering. It's something, it requires quite significant investments, not just in the meters, but also in supporting the technology in terms of the systems that would run that, and also the network itself, so that it supports the kind of smart technology. The first phase was to do with the large power customers and the large power consumers, and all our large power consumers now are on smart meter. So that is giving us quite some benefits in terms of first, the efficiency in terms of being able to read the meters remotely, being able to disconnect and reconnect remotely. As well, we do not have to send meter readers out there to do the reading of the meters. There are errors that would have been involved in that and all. So those are some of the benefits that it's giving us. And we've seen some improvement in terms of the billing and the revenue once we place the smart meters, because of the efficiency that is involved in the smart metering. Now, there's the second phase, and this was mainly supported by the World Bank around smart metering for now the other smaller commercial entities, and those have also been identified, mapped out, and 55,000 of those have already been connected on smart meters. That program was expanded to about 67,000 customers, and that is currently going to reach 67,000 customers. We also have a smart metering roadmap that the company had put in place now to continue the process, so that we in time we are able to have the wider scale of our customers on smart meter. But that is a gradual thing, given the kind of investment that we would require to be able to smart meter everyone.
Okay. And speaking about quick wins to your numbers, granted the numbers that you posted half year benefited to a good measure from rationalization of staff costs. And of course, looking forward, there's a concern that your wiggle room for benefiting from such one-offs might not really be existent, because now you're recruiting, for example, an MD is being recruited. Do you think your scope for cost management is being increasingly thinned out?
Yeah, you know, cost management is quite a dynamic thing, and you don't just cut costs for the sake, because that affects business as well. So it's something that is done in consideration of the business needs. And the way KPLC is as a utility that is really out there, you would require people out there when the network is down, or when there are outages, an emergency team running around to actually fix things here and there and all that. So costs like maybe overtime or shift payments and all that would ordinarily be there to be able to serve our customers in the manner that we should. So what we have been doing in terms of cost management is to optimize in such a way that rather than really have people out there on overtime and things like that, we map out if we have to do maintenance in a specific area, then we try to review and see what type of customers are here. Are they customers who use electricity during the day, or is it a domestic area where the usage is more in the evening and things like that? And we are able to schedule depending on that, so that it is of very minimal interruption to the customer, and as well, if it is within the working hours, then you don't need to really pay overtime. So we have optimized on that, and as well, we have been realigning resources some of the office-based staff where we have automated and we are able to use less staff have been retrained and now put out in the field there to in the commercial business area to be able to do revenue collection activities and things like that, so that we still have this staff on board, but now they're adding more value in terms of where the business needs the resources even more. So as we continue trying to manage our costs, we continue employing new ways and innovative ways of managing the costs, and while really taking care not to really to affect the business adversely.
Let's wrap up this conversation. There was a huge surge in Kenya Power's investment income, and I'm curious as to what investment this is, especially when you consider the sort of cash-rich position, relatively cash-rich position in which you closed the half-year ending December 2021.
Yeah, actually looking at KPLC over the last number of years, we have reported an overdraft at the end of each financial period. But then, as I mentioned, we cleared the overdraft within the 6 months period, and we still have obligations, really. But then that cash position and what led to the investment income was that we had funds that are really earmarked for scheduled loan repayment. And also we received some compensation, some reimbursement from government on the rural electrification operations and maintenance costs. And these funds, along with what government disperses to KPLC for implementation of last mile and street lighting, is what had been held into some call deposits, and that is where the income came from. But then these funds are optimized in terms of they're invested as we implement the projects, because you go through procurement processes and things like that. During that period of time, then you optimize in terms of how investing the funds to be able to get the most out of it. So that is what informed the increase in the finance income.
Final question. The renegotiation with IPPs regarding the tariffs. I know this is a question largely for the ministry, but now from your side, in your own modeling, in your own scenario analysis, once this comes to a conclusion, what sort of tailwind do you see this giving to your numbers for Kenya Power?
You know, a renegotiation or a negotiation for that matter is a give and take, and really there are existing contracts, and these would be based on goodwill, and really we are looking at ending up with win-win situations, as the CS often says. So I could not be in a position to be able to give really a number or the anticipated outcome, but then based on the background work that has gone into this, and really the kind of goodwill that has been expressed by some of the parties to this, and also the approach that the ministry has really taken and is very involved in this, we anticipate to see quite some good outcome in terms of the tariff renegotiations. Thank you.
Steve, thank you so much for your time. Thank you for speaking to Business Redefined.
It's a pleasure. It's a pleasure. Thank you very much.
That's been our conversation, delving deep into matters regarding Kenya Power half-year earnings ended December 2021. Let's see if they'll replicate this performance in the full year numbers. So stay tuned to Business Redefined.